Real estate is always a good investment, especially here in Canada, because we have some of the highest real estate prices and they have appreciated meaningfully in the last, whatever, 20, 30 years. And so what I wanted to do was say, okay, is this true? Is real estate a better place to have your money than in capital markets? So we went and took a look at the data. And don't hear us saying never buy real estate. Real estate is a great asset class. It's great to have in your portfolio as a diversifier and as something that's just not going to be correlated to market returns.
Hi, Tower Talk listeners. As you can see, we've got a great episode planned for you, and we'll get back to it in just a minute. Now, if you're not currently a Tower client, but you have questions about your investment portfolio, or maybe feel like you're not receiving the best service at your current firm, please reach out for an information-only, no-pressure discussion. We would love to hear from you. The email address is in the episode description. Now, if you are a Tower client and you have questions, we'd love to hear from you as well. I think you know how to get a hold of me, but if not, that email address in the episode description will work as well. All right, let's get to today's show.
Tarek, what do you know? What have you learned about real estate?
Okay, so real estate investing, as a Mark and I, capital markets, we invest in equities and things like that. My conversations with clients, with prospects, with even just interested parties I run into on the street or in a coffee shop, always go to, well, I like real estate investing. I like to buy an apartment building or a fourplex or a sixplex or whatever it is. I like that I can touch it. I like that it's tangible. And real estate is always a good investment, especially here in Canada, because we have some of the highest real estate prices and they have appreciated meaningfully in the last, whatever, 20, 30 years. And so what I wanted to do was say, okay, is this true? Is real estate a better place to have your money than in capital markets? So we went and took a look at the data. I'm looking at Canada as a whole from February 1999 till March 2024. That's when the information I found was available. We looked at Calgary, Montreal, Vancouver, Toronto, as well as Canada in aggregate. In aggregate, real estate from February 1999 to March 2024 did 340% return on a cumulative basis. That's 6.1% compounded every year. Okay, so that's good. That's a great number. But the TSX total return over the same time period did 531%, which is 7.6% year over year. So that's not nothing. That is a meaningful, I know that number doesn't seem that much higher, but it is very, very meaningful, particularly over that time frame. So for example, average house price in Canada in February 1999 was 163,000. In March 2024, it was 718,000. That's what the return was. Had you taken that 163,000, put it in the TSX, you would have had $1,029,800 invested. And so it's over 300,000 just over $300,000 more when it's invested in TSX versus in Canadian real estate.
Okay, let me repeat a couple of those numbers. Cumulative return on the real estate was 40%, and same window of time, return on the market was 530%. Okay, and it took $150,000 to either 700,000 or $1 million. So
right.
We should be buying stocks. Okay. What are the reasons? Okay, I'm an equity guy. I like stocks, so I'm going to find reasons.
Exactly.
Okay, what are the reasons a person should buy real estate?
Yes. So, and don't hear us saying never buy real estate. Real estate is a great asset class. It's great to have in your portfolio as a diversifier and as something that's just not going to be correlated to market returns.
Good. Diversifier. Number two.
Yeah. Leverageability. So I think a lot of really pro real estate investors are probably losing their minds right now saying, hey, this is not a fair comparison because I can leverage 4 times my money on real estate. I only have to put 25% down and the bank will lend me 75. And that's true.
Good. Number 3, inflation hedge.
It is an inflation hedge, generally speaking.
But so is the market.
So is the market. Yeah.
So we'll take that one away. It's tangible. I
People
can see
like
it.
that.
I can touch it.
You can touch it. Yeah.
How about correlation to the market?
It's uncorrelated or a low correlated asset, generally speaking. So that's good. Provides diversification.
Okay, good. I think those are 4 good reasons to want and should own real estate. Let's talk about reasons you might not want to. Liquidity.
My least favorite thing is liquidity, the lack of
Yeah.
liquidity. And I don't think people price that enough. You should get paid more to tie your money up in a property than I think most people will give themselves.
So
Lack of liquidity.
the stock market is T+1.
It
You
is
want
T
to
plus
sell your
one.
stock, 1 day later you can have your cash.
Real
What's
estate,
real
you
estate?
list it, you find a realtor, you gotta write up a thing. Yeah.
You argue about commission rates, and then
Yep.
you finally
Yeah.
find a buyer and they knock you down 15 grand. Okay, so liquidity. What are some other challenges to owning real estate?
The property management aspect. So you've
Mm,
got to deal with tenants, vacancy, maintenance, all these things that, again, I'm not sure all real estate investors
mm,
value their time correctly in terms of the return on their assets. So are you paying yourself a fair wage for the time you put into that? And is that accounted for in your return calculation? Do you know what I mean? Whereas with the stock market,
mm.
you can just deal with great guys like me and Mark and have it taken care of.
Okay, so the answer actually that we would be making is a person probably should have some real estate in their portfolio, but they should recognize that fully concentrated only in real estate, there's more to it than just having a nice home that you can touch.
Absolutely. And I think
Yeah.
that touches on a risk we didn't speak about. And, in the investment world, we call it idiosyncratic risk, or the risk that is specific to one name or one asset, right? So if you've got 750 grand tied up into one property, your fortunes rise and fall with that property. We would never say put 750 grand into one stock if that was a significant
Oh,
portion of your portfolio, right?
we would
But
not do that. Yeah.
no, but that's the nature of real estate is the numbers are so large, generally speaking. It depends on who you are and your net worth and so on, that you're tying up a significant part of your net worth in one property, in one regional location with very specific risks. And so it lacks diversification in that regard.
And I think we should wrap it up. Okay, wrap it up, Tarek.
All right. So real estate versus capital markets, we showed that, if you're invested in the markets, you're going to do great. Don't hear us saying don't buy real estate. It's a good diversifier. We just wanted to provide some information. If you have any questions, if you've got a property you want to sell and invest in the market right now, reach out, give us a call. We'd be happy to take care of that for you.
Sell all your houses, buy stock.
Yeah, buy stock.
John, I did not say that.
Exactly.
Okay, and anything else you want to do on the wrap up of the video?
Yeah, as always, if you have topic ideas or if you have questions about your own specific portfolio, reach out to Mark or myself. We'd be happy to chat.